Welcome to Navigating Now, real talk for rocky times. A Pete the Planner Calmcast.
Good day, everyone. It is Peter Dunn, Pete the Planner, CEO of Your Moneyline, welcoming you back to episode 12 of the Navigating Now
Calmcast.
It's unbelievable. It's good to be with you, as always, every Tuesday and Thursday at 2 p.m. Eastern, as we just cover what has happened since we've met last. I'll get to it in a second. Not much. Not much. Things have kind of calmed down a little bit, but we still have a
Calmcast.
Okay, today we're going to talk about three things. The 52-week high and low, which I find fascinating. I always have found it fascinating. Even before I understood it, thought it was fascinating. And my gut tells me you're going to find it fascinating too. Also, we're going to talk about retail sales and what that can tell us about the economy. We've sort of been dancing around that for a while. And then finally, our personal finance tip of the day, we're going to talk about a subscription audit. Auditing your subscriptions. Man, I got a lot of subscriptions, and we'll get there in just a moment. Okay, so what's going on in the market? Well, market is currently up. The S&P 500 specifically, that's the one I talk about in general. It's been up 4 days in a row. Okay, so that is inclusive of the last time we got together on May 13th. May 13th. Okay, so the market is sort of chilling right now, I believe is the technical term for that. It's up 0.6% as of the recording of this here right now, even though we're live, 0.6% for the year. That's where we're at. We're up 0.6% in the S&P 500 for the year. So things have calmed down, and I think they're going to possibly stay calm for a few more days, and then it could get a little nutty. But let's talk about how that impacts your investing decisions, specifically related to 52-week highs and 52-week lows. What does that mean? Okay. So as you might imagine, stock prices, as they go up and down, are tracked over those periods of time, like whatever period of time. And it's not uncommon for whatever tool you use to get the current prices of your stocks or mutual funds or ETFs or anything else is to be provided what was the date within the last 365 days or 52 weeks in which, you like how I explained that 365 days was inclusive of 52 weeks? Do you like that? I'm really saving you time and energy and power and brain computing right there. Anyway, what's the highest price in the last 52 weeks? I'm going to give you a few examples of this and what you can do with it. We're going to start with Apple, okay? The ticker symbol, which is what we call the 3 or 4 letter combination, actually 1, 2, 3, or 4 letter combination that signifies a stock. It is AAPL. It trades on the NASDAQ. The 52-week high occurred the day after Christmas. Merry Christmas. The day after Christmas 2024. The high was, Merry Christmas, $260.10. That was the high for that particular equity. The 52-week low was about a month ago, right after Liberation Day. April 8th of 2025 is at $169.21. The current is $211.13. Okay, so why does this matter? Because we are closer to the low than we are to the high. We are closer to the low than we are the high. And so when you take that into consideration with other elements, with news and earnings reports, you can start to say, okay, well, I think it's going to climb back to its high. And so maybe I want to make that part of my investment portfolio. Or maybe it's the opposite. It's really near its high and you don't see it going any higher because of what's going on in the economy or the news. And so you think, well, if I own that, maybe I sell it because I'm sort of done getting the run out of that. That's how you contextualize how a stock is doing over the course of 12 months. Let's do another example because then it really gets into sort of retail sales a bit. Let's talk about McDonald's. MCD is the ticker symbol in the New York Stock Exchange, currently trading at $314 a share. So that means if you wanted to own a very small piece of McDonald's, you pony up $314 and you're good to go. You can own one share of the business. $326 was the high in March of this past year, just before Liberation Day. And the low was last July of 2024 at $243. So what does that tell us? At $314 now, it's actually closer to the high than it is the low. It has somehow, some way, weathered the storm of economic uncertainty, because when people think about discretionary spending, as we begin to talk about retail sales here, as we think about discretionary spending, it's like, hey, I'm out and about, and on a whim, I'm going to make a purchase. Oftentimes, you can understand how likely a person is to do that based on how McDonald's stock is doing. You've done it a million times. You've driven by the Golden Arches, and in that moment, if it's something you do consume, you'll think, well, I'm going to go in there, grab a Diet Coke with the good ice, or I'm going to grab a fries. Well, I don't even know what they're fried in, right? Because I don't know where they line up on the beef tallow thing. There's a lot going on, right? So you can start to say, okay, their stock price is actually doing okay right now. Does that mean this consumer discretionary spending is going to be okay? Is that what we can glean from this? I don't know. They just announced their plan to hire 375,000 workers. So you could argue that this is a signal that everything is fine. And that's what's interesting about economic data and stock data, for that matter. Let's talk a subscription audit. Now, I don't know about you, but if I look down my bank statement, my spending statement, and I see a ton of recurring expenses, they're often subscriptions, right? You've got this streaming service, you've got this app subscription. In my case, oddly enough, I subscribe to deodorant. It's a really strange thing. It's the type I like. I just subscribe. They send it every couple of months. It arrives. It's a weird thing to subscribe to. Alas, I subscribe to it. But I will tell you this. Let's say you subscribe to apps, and these are apps that you don't even use anymore. Every few months, I go into, because I have an iPhone, I go into my account on my iPhone, and I look at all my app purchases and my subscriptions, and inevitably, I'm shutting something off before it surprise renews and ruins my day. Oh, you've been surprise renewed. It ain't fun. So that's one thing you could do. The other thing you do is just go down your spending and be honest. Sit with your partner if you happen to share finances with someone and say, okay, we have 29 subscriptions. I made that number up. Maybe I made it up. Maybe that's what we have. We have 29 subscriptions. Are we using any of these? And we're talking all sorts of stuff. We're talking magazines, which used to exist. We're talking wine club memberships. So obviously streaming data. You're talking about, surprise or fun boxes that come in the mail. I think at one point I got my wife this subscription box. There's just random gifts. It came every quarter. And oddly enough, it keeps coming because I haven't canceled it. But in some way, by canceling that, I feel like I'm just sending a signal about my marriage. So maybe I won't cancel that one. I'll just say this. If you're at a time where you're trying to decide whether it makes economic sense for you to pull into McDonald's, then it certainly makes economic sense for you to look down your spending statement and see how many subscriptions you have. What I find interesting about this time we're in right now, and I bring up McDonald's randomly, like this is a coincidence, I really am trying to reduce my dining out, and I don't regularly go to McDonald's at this point in my life. But I am really trying to cut back on food spending. It feels like the prudent thing to do. Just like in March and April of 2020, when we all sort of looked at ourselves and said, okay, it feels like it makes sense to not spend money. I am slightly in that direction right now. I will say I'm less in that direction in other consumer goods. I'm curious how you feel. And it's always good to check in with yourself. How do I really feel? How does your partner feel? Do they feel the same? Are you actually not spending money because of that? Well, on magic number 13 episode of this next Tuesday, we're talking the difference between ETFs and mutual funds. Oh, that's a fun one. We're talking core inflation, which it feels like it comes up all the time, and variable versus fixed expenses. Fantastic. Have a great weekend. We'll see you right here on the
Calmcast
next week.
Get ready for full throttle coverage as we shift into high gear for Business at the Brickyard, presented by Liuna with support from the City of Westfield and Daniel's Family Vineyard and Winery. We're giving you the inside track on the powerful connection between motorsports and the Indiana economy. Join us at the Indianapolis Motor Speedway for exclusive interviews, behind-the-scenes access, and the stories that drive the business of motorsports. So buckle up and join us for Emmy Award-winning Business at the Brickyard coverage all month long.